All right, folks, what's up? It is just before 8:30 on Thursday. It's crazy. It's already Thursday this week, December the 10th, 2020, and we're going to go ahead and take a look at our trade yesterday. We had one trade in LABD. So we had a closing trade, and then we had a opening trade, both in LABD. So I want to talk a little bit about the general strategy here in LABD. This is with the LABD, SOXS, and SPXU strategy. And the reason that we're doing these is because all three of these are leveraged inverse ETFs. DUST is a leveraged inverse ETF, but it's only 2-buy. So we had a position here on for December the 31st, and it was a 38.5, 43.5, and so that went off for our profit target, and so we went ahead and rolled out. We have one LABD position on already for January the 15th, and that's looking really nice here. 32 is the short strike, 40 is the long strike here. So we went ahead and went all the way out to March, because at the time, and of course these January 29ths just got released, and we'll talk a little bit about the strategy going into today and Friday here momentarily. But what we want to do is we want to take advantage of this leverage decline, right? And so, I mean, you can see from 575 to 25 in a period of less than a year. And the reason that this exists is because of the leveraged nature. And in general, markets, of course, go up. Here's the 5-year chart, right? So 5-year chart where it, what is this, 20,000, and you're going to see, you know, massive jumps. So this is, of course, reverse splitted, but this is what, 6,000 to 9,000, so that's a 50% jump, right? You're going to see here 4,000-ish to 5,000-ish, that's a 20% jump, right? And so in LABD and these leveraged ETFs, we're going to see jumps like this, so 3,000 to over 6,000, so this is a 100% jump right here. But in general, what we see is the general trajectory of these is down. And so I want to take advantage of this, right? And so we are selling, and as you can see, in general, right, 100 days out, you're going to be below the position where you just were, right? And so we're going to continue to just move down while knowing that there are going to be spikes in these particular securities, okay? You know, this is a pretty big one. What is this? 400. This is a 200% jump, right? And so what we're going to do is we're just going to be really systematic through this process, okay? So in this case, right, we go over the last couple of months, right, we've seen a 60 down to a 25. So is it possible, right, that I pinned the exact bottom of this, and it's going to be a little bit of time before I get out of this LABD position? Potentially, right? But I know the general trajectory, right? The general long-term trajectory of this is down. You know, and of course it is a ETF based off of the IBB, or the biotech ETF, and so that's the general strategy, right? We are playing the inherent long-term decay. So this particular trade, we're 100 days out, right, or 99 days out now. We sold the at the money, bought the one right above it. Okay, and so the general plan here for us is that, let's go to LABD. Okay, so we're going to take off the January position. So LABD, we're down $100 right now on this particular trade. If we get down 300, right, so we go ahead and get up here, 350 is where we'll call. So if we get right up here to the 39 or 40, based on the current levels of option prices, we're going to go ahead and roll this out, right? And the reason that we can do that is if we just go right here, we create a rolling order. Let's just say we go, the next one is June. We can add just a little bit of risk and get massive credit back, okay? So we can get a little bit of risk and just get a massive credit here, okay? And I really like that because, you know, you can increase significant credit, right? So this is a $1.90 credit with an additional $500 of risk. So you're risking $310 per spread, for 190 in credit, right? An additional 3 months. And so this is that rolling strategy that we can do with these securities, right? The other thing you can do is if you wanted to not move your short strike down, you could go out to, like, let's say 35 and get credit, right? So in this case, I would be playing more of an alpha, right? More of an alpha strategy here, in that I would be moving the short strike down while keeping my long strike the same, because again, we're betting that there's an inherent move down in the security over the long haul, right? Over the long haul. The leverage 3 by nature, and the fact that this is a bearish ETF, and in general, stocks do go up, right? Gives us, gives me the confidence, right, to play this, not only for the premium, but for the alpha too, okay? But you can either go short strike down or long strike up and essentially get the exact same type of trade here, okay? The exact same type of trade. So that's the strategy. Again, we're not going to look, unless this gets to like 39, right? We're not going to look at making any type of alteration, and that would be close to a 100% spike from here. Otherwise, you know, we're just going to let this continue to play out a little bit. The other thing too is if we get, you know, a couple of weeks before expiration and we're in the money, then we'll roll out. Okay. Now let's talk very quickly strategy into today. We have seen our next weeklies get set up. So if the bid-ask spread starts to tighten, based on my compounding table, I do actually need a position in LABD. So I, you know, do maybe a 30-40. I do need an additional position here in UVXY, and so we will add some premium here in UVXY. And then finally, I'll be paying attention to the RSI indicators on a lot of these securities, right? Because I do need, of course, 1% of net lick to come off in a variety of securities. And so I might look to sell really small positions at you know, profit 0.1% of net lick after commissions in 5 or 10 securities in order to get to 0.1 to 0.2% of net lick into the security. That way I get my compounding and I stay pretty diversified. These will all be puts because in these leveraged ETFs, right? So thinking Dust, LABD, SOXS, SPXU, UVXY, all of those are call credit spreads, right? Because I know the inherent long-term trajectory of those, and I can use rolling techniques in order to get additional credit should I be challenged on those as we near expiration. Things like Apple, McDonald's, gold, right? These are ones where I'll just roll the securities out, right? And we're selling puts, right? We're selling puts because we know that long-term trajectory of these is up, or I can, you know, roll for a pretty nice strategy in order to continue to get credit, right? So we're not challenging gold right now, but that's where we're at. That's the LABD trade and the thought process going into today. So expect a couple of trade alerts either today or tomorrow as we enter into and really try to build out this January 29th portfolio, which is 50 days out from expiration at this point. All right, if you have any questions, please let me know. Otherwise, let's have a great end to the week.